Today, folks, we are at the pivotal forefront of an economic shift unlike anything I've seen in my decade of investing, which is crazy because as of this month, I've officially been investing for 10 years. We're going to look at the holdings currently within my accounts and look at the performance of these accounts since I started, along with the first video I ever posted on this YouTube channel. If you are on a path to financial independence, to perhaps one day retire early, join me on that journey. Hit that subscribe button and like if you enjoy these kind of news updates and portfolio updates. And getting into it, first and foremost, U.S. inflation cools further in August, clearing a path for rate cuts to begin. We're going to take a look at the FOMC meeting coming up next week that you need to mark on your calendar because, man, it is going to be fascinating to see how these interest rate cuts affect the stock market, affect me, people on a personal level. It's going to be so interesting. Coming from this Global News article, government data last week showed non-farm payroll increasing below expectations in August, but unemployment rate falling to 4.2% from a near three-year high of 4.3% in July, reducing the odds of a 50 basis point cut, boosting the chances of a quarter point reduction. Why is that? How? Because when jobs are actually getting better, they're expecting to have a lower interest rate. Because obviously, if we keep seeing an incline in job losses, that they're going to probably lead to a higher interest rate cut to help stimulate the economy a bit, right? And I'm a firm believer that interest rates have nothing to do with inflation at this point. We went through an entire decade of almost 0% interest rates with no real inflation until the pandemic, and good old Jerome Powell turned that money printer on, right? A guy that nobody even knew existed has become one of the most popular celebrities in the US because of inflation and interest rates. Outside of like a major economic event, nobody cares about who's running the Federal Reserve until it matters. And now, boy, does it matter. So if we take a look, good old boy Jerome Powell here is going to be coming up September 17th and 18th. So literally next week, we have November 6th and 7th and the 17th and 18th of December. So my guess is that it's likely we're going to get a quarter basis cut on every single one of these meetings because there's nothing in the inflationary report that says we should be getting cuts at this point. I don't think they're going to jump the gun and do like a half point just right off the bat. I don't know. Nobody really knows. Obviously, we're speculating here, but it's all based on the trailing 12 month, right? So for the last 4 months, we have been well below the 2% inflation target. I mean, we had negative inflation in the United States in June, right? But what they keep showing you is this 2.5%. Annual inflation rate because it's based on the trailing 12 months. So you can see September we're at 3.7. All of this trailing data is going to start to roll over and we're going to get really great inflation data moving forward. So we are now finally in this new economic world of what happens in this economy that has proven to be incredibly resilient. We're heading for a soft landing. The S&P right now is kind of stuck in this weird spell binding, Halloween effect where in September we always get a sell-off followed by a bottoming in October into the Christmas Santa Claus rally. It seems like we're trying to fight this aggressively though, because we did start that September sell-off, but we're bouncing back a little bit here. And it seems like every single morning right now, the market starts off red. We usually get a pretty wicked sell-off in the morning, followed by a clawing back, like everyone just trying to buy up the dips, right? And if that continues, this could be one of the strongest, you could break the trend, the several-year trend of, selling in September, bottoming in October. We shall see, baby, because if we take a look at just kind of the watch list here, if you looked at this morning, it was all red here, folks. Here we are later in the day, and we're seeing a lot of green, and speculation is still in the market, stronger than ever, in my opinion. I mean, we're seeing Nvidia bounce back. Tesla's at 230. I mean, that happened real quick. I mean, you take a look at Palantir, it's been testing all-time highs here, flirting in the $35 range. Even crypto's been holding on quite strong. So if we take a look at my personal portfolios here after 10 years of investing, it's incredible to say now, for 10 years we've been investing. And I think one of the most, mind-boggling things here is that story of how long it takes to get to 100K versus how long it takes to get to $1 million thereafter. Because back in 2014, when I started investing, I did not have that much money, folks. And when I started this YouTube channel, the very first video I ever posted on this YouTube channel was me selling all of my gold because I was kind of like a Peter Schiff, freaking out on the market. I remember 15 grand used to be like a lot of money, and I was like flexing it in this video here. But maybe we'll just take a look and just kind of see my thoughts when I started this YouTube channel, kind of where I'm at now, and then we'll take a look at the stocks that I'm holding and the performance in my other accounts. And I'm just going to skip through this, but we'll just see the beginning quick.
So here we have a ton of gold. Oh, I don't want to lose it.
Oh, I don't have the dogs on the farm.
No.
My parents retired. They used to own this farm. The Charger days. No idea what I was
Oh,
doing
what's going
there.
on, passive income investors? I'm selling some gold
Oh,
today.
the
So here
cringe.
we are at the Precious Metal Exchange in Canada, and I'm going to be liquidating about $15,000 worth of gold. It is not my
Oh.
entire investment in gold, but
Let's just skip to the whiteboard. So this was me kind of just getting inspired to be like, I really want to start looking at stocks over precious metals. I want something that can generate income, right?
let's analyze why I sold $15,000 worth of precious metals and what I'm doing with that money. But before we get into it, if you guys are enjoying this process and you are a passive income investor, like, slap a like, consider subscribing. But let's just jump right into this, guys. So I have been building up precious metals for quite some time. I had a big base that made up like just over 30% of my entire portfolio at the beginning of 2018. But I started leveraging out and buying stocks and more moving into passive income generators, and especially companies in the stock market. I love the stock market a lot. So if you live in Canada, what's been going on with gold has been a lot different than what's been going on in the US with gold. Because the Canadian dollar has been dropping, and all this fear in the markets has driven gold up. So we're seeing it sitting at about a $1,700 plus price point in Canada. In the US, I think it's like $1,300 right now. It's probably only up a couple hundred bucks this year at most. But in Canada, it is up quite a lot. Now, if we look at the S&P index,
oh man, the dollar was so much more favorable back there in Canada too. Holy crap.
which is the 500 largest companies in the US, they are down quite a lot.
The S&P was at 2,500 and now we're at 5,500. Jesus.
I think the S&P hit a high of 2,900 and something, and now, as of right now, we're sitting at 2,515, which is quite a substantial drop. So I see this inflection. In my mind, I see huge discounts in the market, guys, especially compared to how high I'm up on gold right now. So again, I didn't sell all of my gold. I did sell quite a large position in it because, again, it was just too substantial in my portfolio.
Here,
so I brought it down. Things are up a little bit, but they've actually, a lot of people have been paying it off. I just don't think this is a crash. I think it's actually a well-needed correction, and I think it's starting to set in to its final points. I could be horribly wrong. Don't quote me on this, but I simply invest for one thing, guys, and that is cash flow, because we are passive income investors, guys. We are investing for the cash flow, and that's what I'm going to continue to do. And if you want to follow this channel, guys, you're going to learn so much about building a passive income.
So what's neat is that this is 5 years ago. So this was like right in the middle of my investing journey. And I remember that I started the channel because I had my first 100K. I was like, it's time, right? And now 5 years later, so 5 years to get to the first 100K, 5 years later, I have now built a portfolio worth several $100,000. I own a condo in one of the most, resilient cities on the planet in Toronto. It's just wild, isn't it? So let's just take a deep dive into my tax-free savings account, because honestly, this first account that I started, I have been in and out of it so much. It's crazy to think that it's still up 328% versus the S&P. It's only up 181%, but we can see it's flatlined for over a year because I haven't put any money in here because I used it to buy a piece of property. I did a similar thing within my tax-free savings account because it flatlined for a little bit, but obviously we started rebuilding the account back, and it's crazy to finish the 10-year journey at an all-time high, pretty much for all the accounts that I'm still active in for the time being, up 204% versus the S&P. It's up 134%, and this goes back to July of 2017, and I didn't even make a YouTube video until 2019, like right at the beginning of 2019. So yeah, really interesting stuff. The days before your financial educations, your Graham Steffens of the world and all that. And in this TFSA right now, the way I have it structured, and I'll do a full portfolio update tomorrow because we're not going to look at my corporate accounts today, but I've got VDY here, which I think was the most brilliant timed thing, was selling Tesla at that 240 level after its first major pop, pivoting most of that into VDY that is now up 5.7%, absolutely crushing, which is quite shocking to see VDY retesting an all-time high here, absolutely crushing, doing exceptional this year on the backdrop of oil not doing that well. In the last 7 days here, oil stocks are still getting hit, but the rest of the market has been recovering beautifully, and it's all coming on the back of what I consider to be the interest rate cut recovery. I made a statement that I think a lot of these dividend-oriented stocks are going to do much better in a lower interest rate environment, and as they've cut rates, all these dividend ETFs really seem to have propelled. Oil is really bringing down inflation, and I'm shocked that even VDY has been able to hold up with the energy exposure that it has, considering the backdrop of the oil market. But this is great. I honestly would rather oil go down. I don't mind if it hits my investments a bit because it saves me a crap ton of money at the gas tank, and obviously it allows me to make better, cheaper investments in my broader based ETFs like VDY. But that's kind of for the Canadian side. On the US side, I've still got my triple leverage ETF here that actually doesn't seem to be performing as well today. If we take a look at my watch list, it seems that DRN, it's going flat now, so it's probably going to go green as well. We're still good on the position here, but if we take a look, basically DRN is my triple leverage real estate ETF that I've recently been buying. This is half the position. The other half's in my corporate account. And yeah, we just started buying this in hopes that as they announce that first interest rate cut, we continue to see rallies in the real estate market as we have in Canada. Time will truly tell. It's going to be interesting, and this is going to be a short-term hold, probably 6 to 12 months at the most. It really just depends on how the market's going to respond, and I could be wrong. Maybe the market doesn't respond well to the interest rate cuts. Things have already been overbought, and we level off or start going down. Who knows? Time will tell, but I'm making the bet, right? And then we have XLU, my second interest rate recovery play for the U.S., which has already been outpacing the S&P. Again, we only started buying it about 5% ago from these rallies, but I think all of these dividend ETFs will continue to excel as the S&P is still up a decent chunk in this account, 9-10%, but it's been kind of just flatlining against these other ETFs that have been making up the all-time high performance, that we've seen within my tax-free savings account for the month of August coming into September. Now, finally, we do have my RR to the S to the P as well, my final account here that I'm going to show you guys, because this is my best standing account, again, thanks to Tesla back in 2019. Actually, ironically, when I just started this YouTube channel, so wild to think this account's up 297% against the S&P. It's up 89% in this time frame, and again, tapped all-time highs there coming into July, August, but pulled back slightly because obviously SCHD is the primary held position within this account for me. And I know a lot of people have been hating on SCHD because it's been flatlining in the higher interest rate environment, but I've been buying it on the assumption that I'm going to be not necessarily retired, but I want the cash flow capabilities from these ETFs to be able to fund my basic expenditures in the next 5 to 10 years before I'm 40 years old, ideally the next 3 to 5 years. That's why I'm not looking at like excelled growth or like the S&P or the Qs within my RRSP, because not only do I get the 15% withholding tax waived in this account, it gives me an opportunity to reinvest the dividends, continue to increase the cash flow that I will likely be drawing against at some point long before I'm 65, when this account is actually supposed to be utilized. So those are the primary accounts, guys. 5 years ago we started this channel. 5 years before that, started investing. These milestones are damn near mind-blowing, to go for 5 years to 100,000 and then the next 5 years to like several hundred. And again, between me and my fiance, we have $1 million net worth at this point, but what the next 5 years are going to look like are probably going to be mind-blowing if we can keep up this pace. And it's crazy that most of this has happened in real time on this YouTube channel, guys. Again, I have shared everything in full transparency all along the way to where we're at today. Just showing that, any Joe Blow can pull this off, because for that first 5 years, actually for longer than that, for about 7 or 8 years of my investing career, I didn't make more than $50K a year, guys, and we made it this far. I didn't get, any handouts, nothing crazy. I just worked hard, kept my head down, and invested consistently, just showing you guys can do the same. But I'd love to know what you think in that comment section below.